Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. We got a lot going on today, just like always. But today, really some key news events that came out. The ECB decided they were going to cut interest rates, put our EURUSD. I'm looking at a 9 EMA play right now with RSI confirmation. We're going to break down here in a second. I don't think we're going to get it today, but we might. So we just got to stick with it. Looking at the 30-minute chart there. NVIDIA up at all-time highs. I'm going to show you a traditional Bollinger W. Originally the Bollinger W was designed to trade daily stock charts. I'm going to go ahead and show you what an original Bollinger W could have made you trading a daily NVIDIA chart. And then we're going to talk about gold. Gold's at all-time highs. That's the banger. We're going to do a trade recap, US dollar, Swiss franc. Out of the trade. It was a loser, but it didn't really lose that badly. I'll show you exactly what happened and maybe some options to think about next time when you're in a trade. And then also there's a big level in the Euro CAD that we need to look at. That could definitely be a pretty good trade. We had EIA inventories out earlier today. We're not going to cover that. I'm going to cover oil tomorrow. There's a lot going into the oil market right now, and most of it is elections. So we're going to cover oil in depth tomorrow. If you want to know my oil read, maybe we'll get it towards the end of the stream. But if there's any other markets that you want to cover, let me know. I had trouble talking this week. I don't know what's going on. I think I got too many irons in the fire, I think. Dre Day, good to see you. Dre Day, Bobby Bob, always a pleasure. All right, guys, let's go ahead and get to it. Let's start off with this 9 EMA trade. Now, I'm watching this relatively closely. It's been I would say, we were expecting more out of the Euro USD today. We've sort of got a rotational market. We're only down about 0.33%, which isn't really the move that I was looking for. I want to see a great big trend, but right now we do have a 30-minute sort of setup working here on the Euro USD. You've got that RSI confirmation. Remember, that's just the default settings for the RSI. It's about a 14 period. Right down there, we're beneath 30. That means the market's oversold. We're looking to buy this thing, and I thought we had a pretty good chance of getting long right there as we were coming onto the live stream about an hour ago. I've been watching this one for a while, and I would have loved to have taken that position. That would have given us the opportunity to go long above our 9 EMA with RSI confirmation and essentially put our stop loss beneath this day's long, this day's swing low. That would have been fantastic. I would have loved that trade. Big economic event, ECB. All right, got the big action out of the Euro USD. Then we get our system in there, our 9 EMA with our RSI confirmation, and we have the ability to buy in, lock ourselves beneath today's low, more than likely get that retracement action. That would have been fantastic. It just hasn't quite come our way today. It could, though. It could. I mean, I'm staying patient. If, in fact, we do get that bullish close, maybe I'm in the Euro USD. I'm more than happy to go long. Stop loss is going to be right beneath this swing low here. I really recommend the previous prominent swing higher, swing low. I'm going to talk a little bit about that as we break one of these trades down live, but that's what we're looking at. Pretty good stuff there. Now, as far as another product that I would be looking at to potentially get a trade in, is this gold futures. Now, this is December gold futures. Really some absolutely beautiful trading today. 9 EMA is one thing, but I was definitely looking at that 6:30 bar, my time, that 8:30 a.m. Eastern. That's when all the news comes out. Swing low right there. Swing low right to your top. It's been just absolutely beautiful. The 38% was great. We sort of took it out. I was waiting at 62. Didn't quite get that trade, but even going in right there, I mean, that stuff right there from this high, that was beautiful. That 38% was money in the bank. So if we wanted to use this 9 EMA, though, on gold futures, a couple of things. Number one, I would probably take it down from a 30-minute chart. You'll see that we didn't really have any trades. Going back to yesterday, there was a little bit there. We were in overbought territory. But right now, I want to see exactly what develops. It looks like we're just flirting with overbought. I don't necessarily know how this is going to unfold. Gold is on a rocket ship to the moon. I'm going to be sure to break that down for us. We want to buy pullbacks any chance that we get. 30-minute chart's been beautiful. We're going to go ahead and look at spot gold here in a minute, and that one is probably going to be the one that I want to trade aggressively right beneath 27.50. We've been calling for that for a long time, but maybe we get a pullback buy. So good to see you, Ivy. Welcome. Looking forward to your views on gold. Yeah, everybody's talking gold. This is a good look at gold futures, which an important side note, gold futures right now is trading above 2,700. So it's a matter of time before our spot gold goes. Let's go ahead and just look at spot gold right now, then let's get to it. You're going to have a trade idea that comes out here in about an hour or so in our trade analytics thread. So be sure to look for that. And it does face the gold market. Did a write-up earlier. Go ahead to the front of the website, front of the How to Trade website. Go ahead and click on analysis, and you'll see our gold outlook. The big theme was gold. Gold's making all-time highs. Well, you remember that level. Anybody that watched this stream remembers 2605, 2605. That's a beautiful thing. As a scalper, I'm never around for these big moves. I don't sit there and go, oh gosh, man, look at this giant move. I got in at 03 and I'm out at 93, or made $100 on the trade. And if you leverage that thing up and play it right, you can pretty much go buy a new truck or a house or something. I don't do that. I don't worry about that. I'm not interested really in what happens to the market after I'm out. Once I'm out, I'm out. And we were talking about one-to-one scalps being beautiful from 2603, and boy, were they. So I hope you guys got in on a couple of those. That trade right there, that might have been the trade of the year for gold, at least a short-term trade of the year. So our pullback buys were absolutely money in the bank, but we can't live in the past, and that's all over. So what do we do now? Well, you remember I was really highlighted our all-time highs, and September's high was a big deal to me. And I said, listen, if you take out September's high, you're going higher. I know it sounds silly, sounds stupid. Yeah, if you take it out, you're going higher. No, but really think about what we're saying. If you take out last month's high, you're moving higher. That means that we didn't expect the auction to fail there. We didn't expect this thing to rotate back down. There is no lid on this market. Right now we're seeing a little bit of, there's a lot of traders out there that have their backs up against 2,700. I think they're doomed. This thing's going to 2,750. I expect it to wash out. All retail shorts right around 2,700. If you're short gold right now, be very, 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 very careful. Very careful. As far as how would I trade this? Well, like I said, I'm going to put a trade idea out, a formal trade idea out. It's going to be a scalp to the short from up there. It's going to be a high probability trade. But for right now, what do we want to get accomplished? Any way that I can, I want to join the trend. The trend's bullish. We are now rocking and rolling above September's high. Right there's my spike low. We've got an intraday high. I could definitely be looking to build a Fibonacci like that and bid it. 2675-ish. They're not going to beat us if we get that. If we get that number, they're not going to beat us. We're going to win that. Now, do we get the number? That's something completely different. I can't really say. I don't know. What I would think is we're just going to keep extending higher and higher and higher. We're probably going to have what I call a dead day, which means like a doji or something up there, maybe a hammer, a hanging man before we get the reversal. If we do get that, then we're going to step up and bid. We have time. What I would say is if we want to get involved with a little bit of meaning right now, let's take it down to a 4-hour chart. There you have it. I mean, this is as obvious as it gets. Compression, 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 break. That's sort of a flag formation. Remember, we were talking about bull flags yesterday. That's a bull flag. Run, rotate, break. It's not an accident that we just broke above. We had a bull flag set up right in front of September's high. That's not an accident, guys. Markets have memories. That right there should be prima facie evidence. That's all you guys need to know, that yes, institutional orders do exist. Yes, lids are put on markets. And yes, there's areas where stop losses get run. Right there, what was your high? What was your September's high? 2685.63. Yours is probably going to be a little bit different depending on your broker. Your high right there is 2685.40. 2685.63. 2685.40. And what happens right there? 4-hour bull flag. There's your bull run. There's your compression. There's your break. I can draw it. I mean, it just takes a second to draw it. I'm not the best artist in the world, but I'll give it a go. Something like that. Is it really a triangle? Not really. You could say something like that maybe. We could say that was a triangle. It was a bull flag, meaning that was more of a rectangle. Love bull flags better than triangles. A lot of people love bull pennants. They want to see price action really narrow. I'm not interested in that. What I want to see is multiple failures at a key level and then a break, especially with the trend. And boy, that's good stuff. So that right there, I want to get long any way that I can. 4-hour chart, more than likely we're going to extend to the top side before we get a retracement. But even this retracement right here should work for you. 2687. Remember that daily from 2685 or 2675, 2676. That's probably where I want to get long from. Very confident in that. If we get something like that, we're going to win. Now, as far as how would I trade this into the future? Been saying this for a long time, 2750. I get the question every day, Shane, if you like it going to 2750, why don't you just buy it right now? The answer is because I don't know how we're going to get there. If I buy right now 2692s, yeah, there's $50 there to be had. We could easily shake all the retail longs out, and it will happen. There will be a pullback. You could easily shake out all the retail longs down to 2675. That's just the reality of the situation. Do I want to go along for that ride? No. It's too expensive. I'm going to wait. I'm going to get I know right in here I'm in the kill zone. I'm ready to trade. I'm ready to go long. So if we do get that extension and I get a chance to bid, we're going to bid. We just got to wait for it to set up. 4-hour chart, not too shabby. Not bad at all. I'd say that you could buy those pullbacks all day. The real challenge is waiting to get them. That's the real challenge. So definitely something to think about there. If you're interested in trading gold, be sure to check out Switch Markets. Right now, they're doing a 100% credit bonus. You're going to have an opportunity there to double up your purchasing power and your money. Tuesday, Wednesday, Thursday, you guys know how I feel about that. Pedal to the metal. I almost said something else right there. Would have got me in trouble. Pedal to the metal. We go all out. We trade our plan aggressively. We trade it hard. The idea is to make our P&L for the week. Week 42 right here today. EU CPI, ECB announcements, and retail sales. Let me see. Bobby Bob, WTI is very difficult to trade this time. Yeah, we better hit on WTI. But I told you, I warned you about rollover. I warned you, rollover periods I haven't even pulled a crude oil chart today. I don't trade rollovers. Rollovers are a bad idea. That volume split with an EIA report involved. Today the report came out and the volume split. That is a recipe just to get destroyed. It's too hard. Easy, guys. Easy. Easy is always better. Easy is always better. Keep it easy. When you got that many market drivers out there that are hammering away at crude oil, especially your election, EIA inventory reports, volume splits. It is, God, it's a headache. I don't even mess with it. Next week, I'm going to hammer crude oil. I'm going to be in there deep, and it's going to be a good week to do it. So let's just wait and see how this all develops is what I would recommend. But I hear you. Today was a very difficult trading day for WTI futures. Let's see. Week 42 today, we had EU CPI, ECB announcements, and retail sales. I do want to get on this trade follow-up because on this stream, we lean into the losers. Full disclosure, we got nothing to hide. Most of these things win, but when they don't, it's important that we take a good look at why. Right there was our USDCHF at market. I was talking about selling our 38% level right there. You can see the macro sell, what I believe that was a monthly chart. Typically, my monthly levels are pretty good. This one wasn't. Well, at least not when we hit it. Timing's everything in the markets. But you can see right here, go over to the chart. Right there's your 38%, which is your sell right around 86.31. We wanted to get short from right around 20, somewhere in there, 27. You can see that we didn't get any retracement at all. And what I want to show you is exactly what happens with horizontal support and resistance levels. This level paid you pretty well the first time, the second time, and the third time through. The fourth time we hit it, it was gone, and unfortunately, that's when I put my trade idea out. You see right there, we went on a big rally here, 30 minutes, then we crept higher, then we got a pretty good retracement. At that point, I said, well, we're probably just going to trade down and get out of this thing at break even, and then we crept higher. That red line was our stop loss, 58, 59, somewhere in there, and then what happened? We traded up to about 69, about 10 pips higher, and then we came back down to break even, essentially, but since then, we've been bullish. This trade didn't work. The flat didn't work. Now, a lot of folks are going to say it's not over yet. It's not over yet. And if you're still in it, you're still in it. And you still have a chance. For me, I didn't want any part of this thing. Once we broke above 59, I'm not interested. I'm on to the next trade. We're trading. I'm looking to make money in the gold market, the crude oil market. I'm not interested in having a bunch of capital tied up in the Swissy, hoping that it comes back. I'm not interested in that. So as soon as my stop got hit, that's a wrap. We're gone. And on to the next one. Now, when you play that tight or you trade as tight as I do and your stops are as tight as they are, this happens. You get stopped out, it reverses, goes right back down to break even. That wasn't much fun, but that's sort of the way that it works. So as far as the Swissy goes, do I want to be long or do I want to be short? I'm not interested in any of it. I want to see this thing move. I want to see this market move. I want to see exactly what develops out of the U.S. dollar over the next couple of days. But you can see, look what happened to our trade. Compression right there, break, swept us out. ECB gets involved. They cut rates. That sends a shockwave through the European currencies. What happens? We get swept out. Now we got a doji setting up. If I was interested in trading a daily, I could definitely argue that the daily uptrend's worth playing. Maybe a spike low there to a spike high, and that would be your support zone. That would be our old resistance level at 86.30, right down to 86.24. So instead of selling that area, clearly was not the right thing to do. That order block right there is probably going to be a pretty good buy. Now, do I recommend putting a lot of money on that? No. I have a rule. When I lose in a market or when I get beat up in a market, I go look for something else to do because clearly I'm not on the ball. It's the right thing to do to step up and buy that support zone. It is. But I just lost thinking it was resistance, selling 86.27s. Now I have to turn around and buy 86.27s. What if I get chopped out of there? Psychologically, it's too difficult. Let's go find something else to do. Let's go find something else easier. Let's look at something like the EURUSD. We know we've got something cooking here. We've got a nice doji today. We got a daily triple bottom setup right down around 148.75. We got 148.74. We've got 148.74. And then right there, we've got 148.77. All right, so we've got something going right there on that triple bottom. I would say that that's probably a pretty good bid area. So I'd be looking to bid 76s, about 50 pips down there, maybe 77, 78s. If you're aggressive, 79s. You could do that. So essentially, you could buy from down here and look to get that 25, 30, 50 pip bounce back up in to this order block right here, this range. A reasonable profit target, 149.25. That's doable. So buying down here at 148.79, that sets you up for right around 50 pips, somewhere in there. That could be a pretty good trade. I'm watching that one closely. I don't typically trade the EURUSD, but we are watching crude oil as well, and we are watching the euro because the euro and the ECB, that one's rocking and rolling today. We're definitely looking at that. All right, guys. Let's go ahead and hit a few of our fundamentals, and then we're going to trade some 9 EMAs. We're going to pull up a futures contract and see if we can't make a trade on a real short time frame. Those have been working pretty well. Let me see, Maddie. Good to see you, Maddie. All right, guys, news of the day. The big news was the ECB decided to cut their interest rates, cut them by a quarter across the board. Really came as no surprise to anyone. We were ready for that move. Connor had it live for you, so I'm sure you guys tuned in and enjoyed that one. As far as what other news of the day here during the U.S. session, there's a couple things we need to look at. Initial jobless claims. Now, initial jobless claims are the new folks on the unemployment rolls. Okay, so when we look at jobless claims, the weekly jobless unemployment numbers, we always look at initial. So definitely keep an eye on those. Today came in as expected, right on the nose at 241, down from 260 last week. So that's a bit of an improvement. That means not as many new people are hitting the unemployment rolls. Suggests the jobs market is maybe a little bit stronger than we thought. Definitely take a look at that as being a potentially a bullish market driver for stocks. We'll get to those in a second. Philadelphia Fed Manufacturing Index 10.3. Philly Fed's a regional barometer of manufacturing. Manufacturing has been getting hurt really badly over about the past 6 months here in the States. 10.3, that's an academic number. It's just a statistic. That's above expectations and way above the previous release. So that's also sort of bullish for U.S. stocks, also bullish for the U.S. dollar as well. We're going to talk about that in a second as well. Retail sales. This is the big one. Teachus Gaming, good to see you. Live from India. Love from India. Good to see you too, Teachus. Welcome. I don't know what time it is in India. It's probably a lot later than it is here. I don't know if it's middle of the night or if it's already Friday. I don't know. I'd have to check out my time zones. We're truly global community here at How to Trade, though. Absolutely love it. I'm in Montana. It's going to snow tonight. We're supposed to get snow here late this afternoon and tonight. Winter storm warning. Go figure. In any case, retail sales for the United States is out 0.4%. That's above the 0.3 expected. That's a strong number. So take all of this stuff into sort of add it all up. Add all this up from the U.S. Pretty good numbers. Here's your bullish retail sales, and then right here is sort of where we're at. We're right above zero with the U.S. retail sales figures. So when we take a good look at that, what does that mean to say U.S. stocks? We had a pretty good set of numbers on stocks. Well, a couple ways to look at it. Number one, you could say that let's go ahead and let's get some futures going here. EMini S&P 500. Let's have a look. Look at that. We'll talk about that in a second. Couple things to think about. Number one, if we get a lot of great economic numbers that come in, is that bullish or bearish for stocks? Some folks say it's bullish. It means economic expansion. Times are great. Everybody's going to spend a bunch of money. Fantastic. All right, that's great. On the other hand, all those numbers are sort of bullish for the U.S. dollar as well. That means that you don't need those rate cuts to boost economic growth. So it's kind of a bearish market driver for stocks as well. What we're looking for is huge discrepancies in numbers. Today, the Philadelphia Fed Manufacturing Index was a big deal. It really was. It was a huge beat of estimates, and it's one of those things that they definitely want to see, at least at the Fed. They want to see manufacturing back online, and they also want to see a better employment situation. So long story short, what does all of it mean? It means we don't know anything. We think right now the DXY is up about 0.25%. We think that these numbers are going to contribute to a stronger dollar, which in this case means only a 0.25 point rate cut in November. Keep all that in mind. We're in a rate cut cycle. We've been raising rates forever now. Now we're reducing rates. Now that we're reducing rates, something that would actually be hawkish and send the dollar higher wasn't necessarily the same thing that would send it higher a few months ago. So just remember, big rate cuts are going to be sending the dollar lower. Small rate cuts are going to be sending it higher, and that's what we're seeing. We've transitioned from a half-point rate cut to a quarter point. That's a big deal. That's a big deal. All right, here, EMini S&P 500 futures, one of my personal favorites, although it hasn't been great to me over the past 6 weeks. Not many trades to be had at all. Right here, here's your opening bell, ding, ding. All right, there's your opening bell, ding, ding. What were you going into the session? Where were you? You were sort of an overbought territory on this RSI. Remember, our 9 EMA is our trigger. All right, that's what gets us into the market. That gets us into the short or the long side of the market. The RSI is your confirmation. It's a popular confirmation tool. When you're above 70, you're overbought. When you're below 30, you're oversold. In this instance, going into the U.S. session, this is all during the London session right here. What do you got? You've got severely overbought territory. All right. When would we be looking to sell? Right there on the U.S. Open, we get the big negative candle. Sold right there. What's happened? Got a pretty good push lower, but now we're sort of reversing and consolidating right around the 9 EMA. Got a great question earlier about this strategy. Shane, where would I put my stop loss? Okay, I'm big on keeping it above the previous swing high or swing low. I know it's more expensive, and if it's more expensive, what you have to do is bring your leverage down, or instead of trading maybe an E-mini, you trade a micro E-mini, which is about $1, micro E-mini ES, which is about a buck a piece, something like that, a buck a point, something like that really can help you reduce your exposure while keeping the integrity of the strategy. I would put it there and I would leave it. I would look to take a position and really try to get in on this runner. Now, the question was put to me very succinctly, shouldn't I get out of this trade once we get a bar close above the 9 EMA? My answer was, if you're using confirmation, you can do whatever you want. Okay? Just be consistent. You can't let one of them run and then cut the next one off. You can't let the next one run and then cut the later ones off. You can't do that. It's got to be consistent. There's absolutely nothing wrong with exiting this trade right there. Nothing wrong with that. Just make sure that you're consistent, because if you're not consistent, what happens is your returns become really a function of luck and being lucky. Now, if you're in the market for a while and you understand price action, you feel like you can call the shots on the fly, manage your trades on the fly, then do it. Absolutely do it. I would never tell anybody not to do that has that skill set. I would say for most people that haven't been in the market for at least 5 years, that haven't listen, I'm a 10,000 hours believer. I think to be a true expert in the market, you're going to need to put your 10,000 hours in. That doesn't mean to make money you have to be an expert, but your 10,000 hours typically is right around 10 years. That's when you truly become an expert. I would say managing those trades on the fly, different every time, trying to be profitable over the long haul, that's an expert move. And that turns into really being a discretionary genius. And that's hard. That's why we introduce these rules. Just give you a finite set of rules, load them up, take the trade. So if in fact you wanted to stop yourself out there, great. You're cutting your liabilities off. You're not going to have as big of a risk. You're in good shape. It's not bad. Just make sure that you always do it so you understand what you're doing. Now, as far as keeping it up here, listen, this is a trend. This is a trend type of a system. You're looking at a 9 EMA. The idea is to get you in on something good. And we're using this RSI to really filter out the bad trades. Right there, RSI was telling us to sell. There was our trigger. There was our signal. And then we went with it. Now, remember, without your RSI, if you're a 9 EMA trader, it's as simple as, hey, the bar broke above it, we're going to buy. Hey, bar broke below it, we're going to sell. Hey, bar broke above it, now we're long. You're always in the market with a moving average, just a pure moving average. I recommend using confirmation. I think that if you use confirmation, something like the RSI can really work for you. All right, let's take this down, see if we can't make a trade. What do you guys say? Now, I want the YM. All right, now the YM is going to be your E-mini Dow, okay? Your E-mini Dow. Now, we hit this one pretty good the other day. It's clearly in an uptrend. The Dow Jones Industrial Average is I think we're going to 45,000. We're printing all-time highs every single day. Let's take this thing down to a 1-minute chart and see if we can't execute a trade. Okay, 9 EMA, where are we at? Okay, this was tough. That would have been your signal sort of to sell. Did you get it? That would have been your sell right there. So you got a bit of a move and then stopped out. Depends on how you would have managed it. If you're profitable or not, more than likely you're going to take a loss right there. But now we're starting to sell off here in this E-mini Dow. Now the idea is we want to see this RSI get beneath the 30, give us oversold territory so we can step up and buy this thing. All right, that's the idea. That's the concept behind the trade. Personally, I want to buy it. I would love an opportunity to buy this thing in the next hour or so if I got an opportunity to do it. I think it would be a pretty good way to do it. We just got to wait and see if we do get that set up. We're nowhere near really oversold territory. We're printing about 40 with our RSI down here. So we need to come off another 10, and then we'll look to bid this thing on a positive close above, right above that EMA. NVIDIA. NVIDIA is a big deal. We give you a good shot at a Bollinger W that made a lot of people a lot of money. Right here, NVIDIA stock rises to a new record exceeding June as AI trade is rekindled. Everybody's watching AI right now. It's sort of a resurgence here right around election time. We'll see exactly what happens. But remember, as the AI boom goes, things like copper go. You'll notice natural gas is up 0.5% too. We saw Amazon announce yesterday they were going to invest in low-yield, small nuclear reactors. Why do you think they're doing that? Because they need power to run the new AI facilities. Big electricity shortage if we start going to all these giant data centers. This is a big deal. So this stock goes to an all-time high right after Amazon announces that they're going to start investing in nuclear reactors. Who ever heard of a private company owning a small, low-yield nuclear reactor? I'm not even sure that's legal. In any case, let's check out NVIDIA. Let me see, Medi, what is the E-mini futures? E-mini, electronic mini, so it's a mini-size contract, but it's electronic. It's a futures contract. Pretty much the most, we looked at the ES, the E-mini S&P 500. That's the most popular, most heavily traded futures contract in the world. It's a pretty good market if you're interested in trading the S&P 500. All right, guys, Bollinger W. If you don't know what it is, come on into the room. Check out our strategy videos. This is good stuff. Big sell-off right there in the NVIDIA daily chart. There's a bottom outside of the lower Bollinger Bands. There's the pullback right there. Touches the upper, but you sort of base out. Second big pullback. There's your second bottom. And then most importantly, where's your big green candle? Right there. If you're trading the Bollinger W, this is what it was initially intended for, was to trade daily stock prices. I've sort of adapted it to intraday price action. It can work, can be done. This is what it was for. John Bollinger somewhere is looking at this NVIDIA chart going, yeah, we nailed it. We nailed it. And he really did right there, 116. You're buying right around 116.73, something like a 117 bid. That's absolutely fantastic. Now you're up to 140, so you're up 30%, close to it, 25%. That's a fantastic trade. And that's sort of what the Bollinger W is designed to do. If you don't know what that is, check it out in our academy. First low, nice big sell-off. First low right here is out of it. There's your pullback. There's your second low. Now, it's easy to reverse engineer these things. A lot of questions. You're going to say, well, what about this one, Shane? This low here. I'd say, well, the second low is outside of it. Then the question would be, okay, what about this one here? And I'd say, well, the second low is outside of it. The big question I would get, there's your low, clearly. Pullback. What about that? Is that your second low? And I'd say, yeah, that's a second low, but you don't get entry. You don't get that big green candle. Take a look at the big sell-off. You sort of got a hammer formation there. What we're looking for is something obvious. That is a big green candle. Now, here's the kicker about doing this on a stock or maybe even a Forex pair or something on a longer time frame. That day, NVIDIA was up about 8.8%. Not many people are going to belly up to the bar and buy that after an 8% gain. They're going to wait for a pullback. The smart folks did. They saw their formation, they saw the break, and they bought it. Power of chart patterns, right? Power of chart patterns. Let's go back to gold. I'd be watching that 2687 in a hurry, or I'd be watching it closely. I think that's going to be a pretty good one. Let's see, dollar Swissy, we already covered that. Let's go ahead and take a look at U.S. oil, and we'll sort of get rid of all this stuff and make this as easy as we possibly can. All right, let's see. We got to let's see which brokers offer it. Yeah, Medi, you're going to need a futures broker, so you're probably looking at. Well, actually, I'm not going to mention any of their names. I believe Switch Markets has a few CFDs. I know they have a bunch of CFDs that are based on futures contracts. So if you want to trade the S&P 500, you definitely can cruise over there and get a CFD. If you're interested in trading futures, you got to find a futures broker. So there's a lot of them here in the States. I've heard that it's a bit more of a challenge abroad in Europe and in different locations. But anybody that's an introducing broker for the CME group can get you in. All right, last thing here, U.S. oil. We're going to cover U.S. oil in depth tomorrow, including all the inventories and everything. I didn't really see it fit because we've got a major volume split. Major volume split. And when you get volume splits in a futures contract, typically it doesn't go well. That's why most professional traders just don't trade oil on a day like today. They don't do it. I'm going to go ahead and pull this up and see what our volume split is right now. This is just the CME website. Okay, we're now firmly on December. So if you're trading the U.S. oil, and I really warned you about this, I warned you about this yesterday, you can see right there, that's still the November contracts printing 70.16. Your U.S. oil contract is printing 70.13. Your U.S. oil CFD is still behind. Right now, crude oil has rolled to the December contract, so your pricing is going to be it's not much lower, but it's going to be a little bit lower than where it is now. Be very, very careful as this spread comes in and as this volume becomes diluted. It's already diluted. Be careful with that. You're not going to get true price action. It's a nightmare. A lot of professional scalpers will not do it because the market's too thin. Personally, I steer away from days like that on crude oil. I think it's a bad idea. But that's just me. If you were going to trade U.S. oil, remember that rollover, as soon as this CFD begins to reflect, that's the November. When it reflects the December contract, you're going to have a real problem. You're going to have probably a jump in your pricing. So I sort of put this out there as very, very tentative about doing this, but something like this could work for you. A lot of bearish stuff going on right now for crude oil. 72.04, that would be my sell. I've got a Bollinger midpoint right there at 71.96. I've also got an EMA up there at 72. 70 price selling, 71 3/4, 71.75s. That's a big time zone right there that we could definitely get in and sell. So something to think about there. That would be a pretty good one. As far as the other side of the equation, do I want to buy it? I don't know. It's a long conversation, but what I would say is probably not. You don't want to buy crude oil right now. We need to see a bigger sell-off, maybe down to 64, 65. I'll outline that for you tomorrow, but if we do get a bump, something happens, we get a bump up to 62, that's a pretty darn good sell. All right, everybody, I want to thank you for joining me today. It's sort of been an interesting week on the markets. I've sort of enjoyed it. It's nice not to have a ton of economic events, but today we did have an active news cycle. ECB dominated everything. So you definitely want to keep an eye on those euro pairs. We got a pretty good level on that euro CAD. Keep an eye on that one. I'm watching that daily triple bottom closely. As far as gold goes, I mean, you want to buy pullbacks any way you can. And on a daily, if today's daily high holds on gold, that daily pullback is going to be pretty good. All right, everybody, that's it from here. Trade the action.